So today, as many of you guys have requested, we're going to do an update into SFL Capital and look why the stock dropped so much yesterday. Apologies as well that I didn't do this video yesterday. I was just a bit tied up for time. I think I ended up doing an extra 3 hours at work. I also had a football match that night. So literally I was in at probably something like 10:30, and by then there's no point making a video. So apologies for that. If you do want more regular updates, the place to be is the Patreon. So when the results came out at 7 AM with this trading update or profit warning, I was giving my thoughts on there about SFL Capital straight away and if I'm going to be buying today. So yeah, that is the place to be. But anyway, getting on to SFL Capital, they did do a bit of a trading update or a bit of a profit warning. It did send the stock down a huge amount yesterday, and we're going to look at what that means going forward for this stock. So let's get started. So today the stock is up 8%. I thought it would have a bit of a bounce up today after that sell off, and it is doing quite well at the moment. We'll see how it closes though. There's plenty of time for this stock to carry on moving. Now, if we do look at SFL Capital, actually let's go yesterday. So yesterday you can see here, boom, the stock on the open dropped 50%. Now it did have a little bit of a rally at one point, but then it did kind of carry on sinking down. It didn't close at the lows. It was up slightly from the lows, as we can see here, by about 10%. But yeah, it did end up closing. Let's just have a look. I think it was like 44%. 42% down yesterday, so that is a massive drop off. This company nearly lost half of its market cap yesterday. So you're looking at this thinking there's going to be something seriously wrong for this company to lose half its market cap. To go from over $1 billion company down to 734 million in this time frame. There's got to be something seriously wrong with this company going on. Now, when you look at the share price as well from a longer term point of view, the key thing is to look at September time. This stock was an £8 stock in September, and it had been on a really good run previously. So, a really good time was to be taking profit on this run up, which I said I was doing previously when the stock was having this run up. So I have got a little bit of profit off the table. What I didn't expect to happen is I knew that this was potentially going to have a pullback to, maybe the £5 range or the £6 range, because it was getting a little bit carried away here. But what was not expected to happen is this. 84% drop off in the share price. So when you're seeing this big massive drop off in the share price, you're thinking, okay, there's got to be some negativity priced in. There's a few people looking at SFL Capital thinking it's a digital marketing company. We're potentially entering a recession. We're going to see this company being affected because companies won't be spending as much on the marketing budget, and that will affect SFL Capital. And what we were seeing is that started to get priced into the company. What's been the big massive surprise is this company has now sold off 83%, and is obviously not adjusting for share dilution, is below like its IPO price, basically from around 2018, before this was a shell company that it did merge with. You can see that it's below its IPO price, which is just absolutely insane. Now, what is even more crazy, I think, about SFL Capital is that until yesterday, there was nothing this company was doing wrong. This company had a 84% drop in the share price, but we were seeing all the updates from SFL Capital being like, yep, we're doing absolutely amazing, we're doing amazing, we're doing amazing. And you look at the stock price going lower and lower, and you're like, but there's nothing wrong with the company. So you're thinking, okay, there's already a lot of negativity priced in. There is some sort of recession fears priced into this company without actually the company doing anything financially wrong. And then yesterday it comes out with a trading update or profit warning, and this was the first time we've seen SFL Capital show some signs of weakness. And the thing is, when the stock opened up yesterday, I'm looking at this, so 7 AM, see that they've brought out this trading update or this profit warning, and my first reaction is, I read it, and I'll go through it all in a second. I read it and I went, oh, okay, that's not good. I thought this stock is going to get hurt today. How much is it going to get hurt? Well, you look at the negativity that's priced into the stock in these last few months, and you're thinking, well, it's not a good update. This is probably going to send the stock down 10%. Technically, we are in a bear market. Maybe we'll go down 20% here. But you look at this thinking, okay, there's already a lot of this priced in. You've got to remember this company's been performing absolutely amazing until this point. But nevertheless, the share price has already baked in negativity. I'm thinking, yeah, it's going to have some sort of drop. I don't think it'll be a big one because there's a lot of negativity already priced in this company right now, and this is the first kind of sign of weakness. And then as soon as I see the market open, boom, the stock is down 50%, and I'm thinking, whoa, what has happened here? Like, sure, this update was bad, but does it deserve to be down 50%? Do we deserve to lose, 700 million in the market cap nearly? I'm thinking, what is going on here? And we'll talk about that a little bit more in a second. But my first reaction as soon as this opened up was, this is one of the biggest overreactions I've ever seen from the market. But we'll go through this update and we'll talk about that in a second a little bit more. So the first update was about the revenue. Whilst like-for-like revenue and gross profit net revenue is in full line with the run rate expectations of 25%. So first off, it's still performing quite well on that point of view. It is clear that the company's EBITDA and EBITDA margins will be below its expectations for the first half of the year, telling us that the profit is to be lower than what is expected. Continued significant investment in hiring and consequent expansion of the company's cost base, particularly in the content practice, have had negative impact in the first half EBITDA and EBITDA margins. With the pattern of profitability already significantly skewed to the second half of the year, as previously signaled, more than the usual 2/3 weighting, this means that the profitability required for the second half of the year to meet market expectations will be even greater. So potentially, you never know, the second half is going to be the stronger half of the year, and potentially we do see a surprise recovery here. But I think SFL Capital basically came out and said that it's a little bit too big and we're going to play it on the safe side and downgrade what we're expecting on the EBITDA basis with this profit warning, which is fair enough. But I think there's still potential here that it's not as bad as what SFL Capital have said. We'll see what happens. Now, what I'm going to say is they did say that there was significant investment in hiring and expansion of the company's cost basis. So what we're seeing here is the company is investing a lot into its staff and who it's having working for its business, which is not the worst thing ever. However, what I am going to say is it would have been better, I think, if SFL Capital came out with more details here and a bigger explanation of what's going on. I think if there was a bigger explanation, then that would have probably calmed the market down a little bit more. So that's my only negative with this trading update. More detail would have been good. However, we got a clear explanation of what's going on here. As a result, the board has decided that it would prefer to lower expectations for its target EBITDA for the full year. Same again, it looks like the board is kind of playing it on the safe side and going, okay, we know we're going to have a better second half, but I don't think we'll be able to recoup this, so let's bring expectations down, and potentially further down the line we could potentially over deliver. Now, it is also key to kind of make sure that I'm also playing it cautious that when we have a profit warning that this does recover, so I've got to be careful that we aren't followed up with a second one in the second half, but we kind of know this was going to be happening from the start. But that's also something that I'm also going to be very much careful of. Now, it's going to be approximately 120 million whilst maintaining a target of 25% like-for-like gross profit and net revenue growth. So the gross profit is still moving very much in the right direction, which is great. And the board notes that analyst expectations forecast for the EBITDA was going to be in the range of 154 million to 165 million. So you can see this is around about 20%, 25% downgrade on the expected EBITDA. So that's quite a bit of a drop, and that's what was the I think the shock to the market was that kind of 25%-ish drop on the expectations, and I thought that's what spooked the market, and I thought, okay, that's what's going to cause this kind of 10 to 20% drop in the share price. But what it caused was like a 50% drop in the share price. And then reading that update, I was like, yeah, it's not great, but a 50% drop was a massive, massive overreaction to me, because even the drop in the EBITDA wasn't that much as what is justifying a 700, 34 million, potentially a little bit higher drop in that EBITDA margin. To then lose 700 million on the market cap was a 20x expansion of that change. And I was like, it's just absolutely nuts. To lose 50% on this trading update from that was just unbelievable. And the crazy thing now is that even if we do like 120 million in adjusted EBITDA, that actually puts it down at like 5 times EBITDA, or a little bit more after a slight little jump up. But like a 5 times EBITDA for this sort of company, which is just absolutely insane. So even from an EBITDA valuation basis, this is incredibly cheap. And then we look at SFL Capital itself. Right now, it's trading, at a price-to-sales ratio of a 1. By the end of the year, we're actually going to be trading under nearly a 0.5 price to sales ratio for this sort of company. And we know this company, sure, there's a little bit of a hit in the short term with a lot of these hiring costs, but let's not forget, SFL Capital is currently hanging on to like 80% gross margins. Like, that's a very good amount of gross margins here for this sort of business. And when people worry about profitability, this company can easily go to profitability with 81% gross margins. After it stops, it's scaling up the company, it's more focused on growth. When it does start focusing a little bit more on the profitability side, this is going to be very easy for this company to reach profitability. And in fact, when we do look at the past performance, it's very much hung on to very much break-even profitability. It's only this year with a lot of expansion and investments and acquiring companies that it's a little bit dropped off on the profitability side, but in the future that will recover and go back to where it is previously. And like what I was saying earlier, with 81% gross margins, it's very easy for this company to reach profitability. It wouldn't be too hard, and actually analysts are very close to what I'm kind of thinking. I think in the next few years we'll actually see SFL Capital putting in the likes of a 10% profit margin, and that's not even factoring the growth that it's going to have. So when you start thinking, okay, let's say it does let's say that at the moment it's going to do 1 billion in revenue. Let's say we stick a 10% profit margin on, it does 100 million in profit at 665 million market cap. This is like a P ratio of 6. A 6 for a company that is growing at these sort of rates is just insane. And then if you start factoring the growth, let's say you start running 20% revenue growth per year, even if we go use analyst projections here in 2024 and they do 1.5 billion in revenue, let's say they do 10% profit margins on this, you're talking 150 million in profit. That's nearly going to be a 4 times earnings for this sort of company. You're not going to get this sort of company at 4 times earnings. This company is going to be a lot higher than that. And the thing is from this SFL Capital, when you look at the share price, at £1.27 below IPO prices, this is an unbelievable opportunity in my opinion right now. And you start considering, it might take a while to kind of push to these highs of £8, but easily I think this stock should be right now above £3 even with this news out. But arguably for me, this is a £5 stock straight away. And when you look at this kind of upside from here at £1.28, you're talking 4-5x potential, and then you're not looking at what it could potentially be in the future. It's insane upside here. So for me, what we have right now is a fantastic company. Sure, there's been at last some negative news, but that should have surely been priced in by now when you look at this sort of drop off right now. And like I said, you're talking, if we'd start doing 10% profit margins, this is going to be, in the future trading at 4 times earnings. Right now it's trading at, 5 times EBITDA at the moment. It's insane valuation. And that drop yesterday, a drop of 50%, was by far, I'm going to say, the biggest overreaction, the biggest drop off I've ever seen in the company. So I guess this kind of leads me to my final point. What am I doing with SFL Capital? Well, I'll let you know straight up. I did buy some shares yesterday. I did buy quite a few shares yesterday, and I probably will continue to buy shares in this one and bring my cost basis down. I'm going to be a little bit cautious because I am going to make sure that this profit does not then go into the second half of the year. I've got to keep that in mind and maybe not commit too early with buying into this position. But when I can, every couple of weeks, I will be nibbling away and buying some shares in SFL Capital because I think this is a very good valuation for this company. And I don't know how much more negative can be priced in. I mean, I thought yesterday, that profit warning did not justify a 700 million market cap wipe off. So I mean, you never know. We are in a bear market, and I think there's a lot of negativity priced into this one, and I think it's a fantastic opportunity. But I'll just be a little bit cautious as well. But I mean, I don't know how much lower it can go because this growth stock is one of the cheapest growth stocks I have ever seen. It's very much like a HIMS at that sort of valuation. What that was valued at, that was same, insane growth rates at 1-time sales. So yeah, I'm buying SFL Capital on this dip. I'll let you know that right now, guys. Anyway, so I hope you enjoyed the video on SFL Capital, and let me know what you think about the drop in the comment section as always, and I'll see you in a bit.